All right, so MT4 defaulted to opening right here. Let's quickly talk about my weekly charts. Waited for the XY to get here. Now that it's here, need to see some movement. EU still behaving. Need to see some movement away from here before I make any decision, which is why I'm not touching EU. I don't feel the need to touch it. AU on its way to target. I think I shared this weekly chart back when we were trading somewhere down here. I think it was the close of this week. And at the time, that chart had the annotation which said that if we don't close below here, then 0.76 looks likely. So that's a nice 200 pip move so far. This is GJ. I don't think I talked about GJ recently, so I'll skip that. GU, definitely didn't talk about this one, so skipping that. And gold, I already shared I'm bullish gold. And I think it was on these charts. Probably this one. I was sharing. These are the charts I shared. So that's my gold target all the way up there. And AU, push it for this high to get taken out. Nas is already behaving, so I want to see another run to 1500. And then I start considering if, I should put these eyes on my menu or look for a deeper retracement. So let's get some clean charts up and we'll review today's price action. Starting with Nas. All right. So I'm going to talk about a couple of things here today. In particular, I mentioned that I don't trade a lot using a weekly chart, not a weekly chart, but any kind of higher time frame chart. And you really don't need it if you can find a way to interpret a higher time frame chart with a lower time frame perspective. And I started doing this for precision. I was obsessed with, precise entries, precise exits. So I started doing this when I found an indicator. So if I'm on an hourly chart, I can see what the daily chart is doing without going to a daily chart. I can see what the weekly chart is doing without going to a weekly chart. All right. I can do all of that right here from the hourly chart. How I do that is I grab a line, and the vertical lines you're seeing here are New York midnight delineated. So now on this hourly chart, this is what I'm looking at. I'm looking at the range of price between these lines. So if I put highest high and lowest low like that, this is giving me the daily range. If I want to break down the daily range for this particular day, then I can just go to a lower time frame. I'm still looking at the daily range without using a daily candle, and I can see everything I need. Same thing for here. That's the low of the day. This is the high of the day. Right there. So I can see what the daily candle is doing again without going to a daily chart. And this gives me everything I need. Liberty. Okay, let's mute everyone. So again, here we are. And that's that. It's midnight. And we'll go over to here. And there. So we're still at the hourly chart, but I can use this data to essentially frame where my next trade should form. All right. So as a scalper, my time frame of choice is primarily a 50-minute chart, 5-minute chart or less. So I'll kind of run through this analysis here that we did this morning and why I was so bearish on Nas. So we all know that the market is either in one of 4 conditions. Either it's expanding, consolidating, retracing, or reversing, right? How I look at that is if we're breaking above a daily high like this, if we're breaking above a daily high, I expect one of 2 things to happen here. Either we're gonna get a turtle soup, depending on the time of the day, or we're gonna be breaking through this high and going through this high, right? So if you're looking at the price action like this from a 15-minute chart, again, this is showing me the daily range. If you don't mind, can you show us an example of a reclaimed block and a narrative behind it? I don't think that idea is mine to teach. So yeah. So this is, let's say this is the daily range, right? For the day after, even before price action starts, you can simply frame the trading range that we have right here, focusing on high as the low, and the 50% of the range is essentially. If the market is breaking higher, like this day broke above a high, this day broke above a high, we're essentially in a bullish market structure. So the higher time frame is saying that we are in a bullish market structure, right? So if you know that the market's in a bullish market structure and you're looking to participate, you're obviously not going to be buying when it's breaking out at a high. Well, I don't think anybody's doing that still in 2022. So you're primarily waiting for a retracement to position yourself in the move, and then when price is running, this high again, you want to get in. So if you're looking at this as a retracement, you would buy this in here somewhere to take out this high and continue higher. But how do you frame where you should look for your entries? Or let's say you get up at a random time of the day and the market's at a particular price. How do you frame if you should look to enter or not? For me, I look at it from the perspective that ICT taught me and then everybody else, which is market's always in either a premium or a discount. So once you find the range, you can know if the market is overbought or oversold, or get an idea of overbought or oversold without putting an indicator on or putting anything on. You're just looking at the range that you have and then frame everything around that. So in this particular day, this is the range. This is the midpoint of the range. So if I'm looking to get involved in this to push higher, naturally I want to be buying below discount. But we don't have this price action as yet. We don't have this day at all. So how can I use this price action right here to get an idea of what I want to do tomorrow? Well, at the end of the day, I'm looking up to here. At the end of the day, I want the range and I want to know where the midpoint is. If the market is opening in discount in the range, then I'm not going to expect a deeper run down here for an entry. I'm simply going to be looking for a break in market structure, break off one of these highs that were formed before today, and then position myself after the market structure has broken. So we have that 50% here. And if you look at this market structure, it's starting to make sense that we broke here above this high, right there. So the market structure on a higher time frame is already bullish. We opened in discount, so you're looking for your bullish arrays to enter. We get a break in market structure. This leg right here is the leg that you're going to be focused on. You're focusing on this leg because this broke market structure, then push higher. So in here is where you want to be trading when price is trading back inside the range from this high to that low. Now that's a lot of price action and that can be refined. How I look at it is from the model I shared some time ago, which is very simple, which says this. If I identify that price, which is that green line right there, as a quote unquote key level or whatever level that I'm thinking my next trade idea should form at or be sensitive around. This level is just price. That's all it is. It's just a particular price to me. I have an entry model or a couple of models that I look at. When it gets here, I'm not going to buy the first rejection unless I have confluence. But under normal circumstances, I want price to get to this price level, then I want my entry model to form. Entry model, that model I showed you guys before. This is a range, true depiction of a range. I want the range to be formed above that key level. Then I want to see price drive below my range as a stop hunt. Then this leg here is where I consider the market structure to be broken. Then I start stalking the delivery of price from here to here, and I'm looking for the imbalances that we're going to be retracing to. When it retraces like that, to the imbalance wherever it is in here, or whatever confluence you can find, I want that, and I want to go long. Simple idea. This is the only thing I look for. I don't care about anything else. I don't care what works for anybody else. This works for me, and I stick to it over and over, and it makes managing my risk comfortably. Because if I'm looking for a retracement here inside this range, if the market is breaking below this quote unquote key level, then I'm wrong about this idea and I want to be out. So max, my stop loss is going to be at this low. So if I have this bit of price action here, and I can, again, get my fib, find the low, find the high, find the 50%, and I can find confluence around this fractal idea around here, I look for the ideal entry to be there. So if it comes right back below here and everything is perfect, then I'm going to be putting on what I'd consider my full risk on this position to go long. But let's say the setup forms here. All right, so let's say this is the 50% line that you want to enter. Then price comes down, and then from a fractal perspective, it forms another one of this big model right here. If I plan to take this trade, since it's not ideal because it's not exactly happening how I want it to be, I'll be forced, based on my rules, to reduce my risk here. So if I usually put 1% risk, the fact that this isn't ideal or this isn't an A+ setup, I'd use 0.5% or 0.75 or whatever you're comfortable with. But you're essentially managing the risk around this setup because it didn't come back. It didn't meet all your entry rules. If you don't want to take that setup, then that's fine. But this is just an idea that you can use to manage your risk around different kinds of setup. I only trade this setup. The only thing that makes it effective is time and some other things. So when you take a look at this, and I see this right here, if I can see that this is the leg that broke market structure, I think I might have to clear this off. Let's say we have that, and this. If I can see that this is the leg that broke market structure, then essentially I have found this leg in price. Once I can identify the leg that broke market structure, I've identified this part of the model. So if I've identified this part of the model, looking at the price action, it should be easy to put this idea together. I'm looking here for the low that was rated. Then I want that range. And then the model is over. All I have to do now is wait for this retracement to get me in the move. This retracement, I'm looking for it to come back to, I don't know, you want to call it a key level or an imbalance or something inside here that would make me excited to go long. So with that in mind, I'm gonna clear off this drawing now and let's look at this price action right here for Nas. So we opened here in the discount under the range. I'm bullish. Bullish again because the higher time frame is breaking above daily highs. This leg breaks market structure. That's my range. I'm looking inside this range here for a reason to go long. Zoom up, make it a little bit clearer. So here we are. When you look at this range, I take the fib off because the fib has already done what I wanted it to do, which is just to identify this line. Right there. Before this move comes back to this red dotted line, you have all of this price action right here available to you. Everything up to the point where price broke above the high. So you can start anticipating where you want to set up the form. This is the most obvious place. So you're looking for price to come back here, and you're going to be a buyer right there. Now, if you are looking for confluences to be comfortable, put your fib on that right there. This low to this high. From a fractal perspective, both 50% levels are overlapping. This is a 50-minute chart. If you're not comfortable executing a 50-minute chart, then you drop to a 5-minute chart. Where is it? Somewhere over here, I think. Then you drop to a 5-minute chart. On a 5-minute chart, you do not want to adjust your levels. You want to look for confluences. That's a difference most persons, I think that's a thing that most persons do. You want to reduce your stop loss so much that you distort the area that you should be looking at just because you want a tighter stop loss, which I understand, but inside here is my focus right there. So when price is coming down, or before price comes down here, I'm looking at this bit of price action here for something inside this gray area that makes me comfortable trading. On this time frame, the only thing I'm seeing worth noting right here is the fact that price pushed up here. There's a short-term low right there. Then we traded higher. So based on how I look at the market, whenever I see expansions, I look for one of two structures to form in the expansion. It's either going to be one straight push like that, or it's going to be something like this, this, and then this. And this is something I've shared on my YouTube as well. If it looks like this, then I call that type 1 or type 1 expansion. For type 1 expansions, based on what I've back tested and reviewed, most of the times you get an entry by putting a fib from there to there. You get a fib entry, and then you continue. When the expansion is like this, then I'm looking for this short-term low right here to be broken. Like that, then we continue higher. It's that simple. So when I look at this market structure right here, I'm seeing a big run up right there, small retracement here, small retracement, then a push. Now this is a very different type of market structure, but what I can see is the lows that are formed right here. So when price comes down like this, it's taking out this low, then it rejected immediately. When this candle closes, this is an aggressive entry model, but when this candle closes right here, if you're not confident enough to enter at the fair value gap with your stop loss down here, I'm looking at entering when price trades back down inside this candle. So when the market opens up and it's going down here, I want to go long right there. The deeper the run, the better it is for my stop loss. But for my comfort and my rules, I just want to see price not close below this area, which is the gray box, and then give me confirmation to go long. So I have different confirmations that you can apply. If you're, again, hung up on tight stop losses, you don't want to trade a 5-minute chart, and there's a 1-minute chart. Same idea. This is your area that you want to enter. This is that leg in price. You want to be buying below these. So from here, all the way to the high, we have lows that are above that 50%. This trade down here below this is not a buy for me because the confluences that exist here are less than the confluences that exist right here. So if I enter here, this is going to force me to put my stop loss below this because I expect that price can trade back down inside here. This low, on the other hand, is sitting right above that area I want to enter. So if they raid this low and reject, perfect. I want to be a buyer there. If you're not confident in, buying as price is trading down inside that, with your stops below here, then you wait for confirmation. Whatever your confirmation is that you use, you can start looking for them right here. So price trades down here, rejects of a down candle, go back above the body, and you come back down here. That's a buy. Now, for most persons, they would watch this candle come down and then you're anticipating that it's going to take out this low again. I'm not like that. Instead, if I don't feel 100% comfortable about this trade, because if I enter here, my stop loss is going below this low. That's a rules-based approach. If I'm wrong, I know immediately that I'm wrong. If you're trading a pair that has wide spreads like GJ, then you can add spreads to the low and put your stop loss down here. There's your run. Then as you're managing the trade, you're looking at the price action that was formed before you got in. So you got in on this candle right here. If the market structure is bullish after you enter, it must be breaking highs and going higher on a closing basis. So not just, you can't see this wick here and then buy again here, even though it looks good in hindsight. This is madness. You want to see price closing above here with bodies above, and that's when you start stocking entries again. So if this was your first entry and price trades up, we broke above this high. Right here. So when this happens, I'm comfortable being bullish. Now, if I don't believe that price should come back down here because it's already rejected, then I'm looking again at this run. What's inside this run that would support the idea that we're bullish? We have a down candle here that creates a run that breaks above a high. For me, this is a high probability order block. Whenever I have a order block that breaks market structure, I trust those more than seeing a random down candle in the middle of nowhere and then, call that support and then buy again. I want to see this. This is a rule. Any order block that I'm using to trade must create a swing starting at that order block that breaks above a previous high. So this, I will trust this buy with my stop right here. And if you've seen my trades, a lot of times you see me take continuation moves up here like this, and the stops are all the way up here. This is the idea behind it. I'm looking at the market structure that supports the idea. So as the candles are forming, I'm looking at the candles. What do I want to see? What do I not want to see? If I'm going to enter, it has to come back in the gray box to give me an entry right here. If I'm going to enter again, it has to create a structure above my entry that I can trust for a secondary entry, which is this. So with that idea, it's easy now to see how you could frame out this move. So if I hop back over to a 1 hour chart, and I'm just gonna clear all of this. And then real quickly, look at this right here. So this is what we're looking at. I'm gonna drop to a 15-minute chart. So we're looking at this market structure, and this is why today I was saying that the only things I'm expecting is Nas shorts, gold longs, and AU shorts. AU wasn't as clean, which is why I didn't take AU until all the way in the evening. The Nas shorts were great, even though it tried to trick me in the beginning. And the gold longs were even better. So the gold long was this idea. I have to be careful. I don't want to click on a chart that has anything that I'm not supposed to be sharing. So let's clear that up. So using that same idea on gold, we're going to look at this in a second. So we have this, grab our fib. That's the range right there. So here's a 50%. If there is reason here for me to buy in a lower time frame, then I'll buy this if I'm bullish. Reasons for me to be bullish would be that we broke above the previous day's high in this run. So the market expands, retraces, expands again. So this is a buy. I did not buy this because I have very specific rules that I use to enter. Right? I think Shamar was probably in this too. No, well, no, I think it was on gold. So then I already have my level right here, which is at 50% that I want to enter. Now I primarily trade the New York session. So since this is my midnight on this broker, I'm looking at 1400 right there for my New York opening price. So this is the range that price was trading in before New York. I'm gonna take off that fib now because I needed to do something, but let me keep this level in mind so you know where it is. Let's go back over here. So the range that price is in when we were at New York open was this right here, right? We opened in the discount end of the range, deep discount. My bias was already short, so I was not entertaining this buy idea. I wanted to see that run higher above this 50% level because this is the range that we're trading in before New York, right here. So this is how I see it when I'm looking at price. That's the range. We're opening in deep discount. I'm not selling in discount. Doesn't matter how good this is. If it never comes back and give me an entry, then I never take this trade. Full stop. I want to see price come back above here, which is why I was shorting when price traded initially, and then, you know, it was not being friendly. I realized that the error I made was the time of the day that I was trying to short, but that's something else. So I shorted this when we traded above the high because nothing about this for me made sense. All right. So I shorted here and I took some other shorts in here. So this is one of the reasons why I was adamant about shorting Nas today. I'll show you on gold why I wanted to be bullish. Previous day's high, previous day's low, fib the range. That's where we are. 50% of the range comes in right here. So the market opens in the discount end of the range. See that right here? It trades down in, just before New York open, did whatever, and then it broke market structure higher. So we have this leg here that broke market structure. So my only concern is this leg. And I'm looking for an imbalance for price to retrace to get my entry. That's how I want to see the price being delivered. But I still need to incorporate time in how I enter. So I go to the 5-minute chart like I always do. I mark out my New York opening price, which is right here. Let's get that fib now and put it on this range from this low to this high. So I'm bullish gold, but it's opening in the premium end of the range right up here. I don't want to buy this up here. So most of this morning, and you could hear me saying that I'm gonna buy when price trades back below 1926. Why 1926? Is because we have 1925 right here as the 50 level. The imbalance is right here. So remember, once you see that expansion leg, you're waiting for the retracement to get involved. When it's retracing, you're looking at the imbalances that were formed. So I have confluence around the 50 level and that imbalance right there. The red vertical line is New York opening for me, but I don't adjust my time for daylight savings. So depending on what broker you use, you could just look at the chart and then recreate it, whatever time zone you use, and then mark that time if you're comfortable trading like that. So we trade down here Again, this is just going to be my key level. This in here is a key level. This is nothing to enter, because if you enter in here, then logically your stop is going below the low. The zoom model that's right here. 1 second. I'll show you what I used regarding the zoom model. So on a 1 minute time frame, if you take a look at this chart, this is that initial run into the imbalance, and then we break higher. Well, actually, the zoom model I use right here, no, can't share that one. But anyway, if you're looking at using the zoom model here, you want to identify the range that was rated using this. So look back for the lows that were rated. This is the lowest low. So let's just use this. That's the low. If that's the low, then the high of the range would be here. That's the low, that's the high. So when price breaks above here at this point, when this candle here closes, actually the one before it, my bad. When this candle closes, my bias is confirmed bullish. I already want to buy here. I entered using something else down here, but this confirms my bias. If you remember this morning, I was saying, I think Shamar was trading gold as well, that 1929 level looks like it wants to say hello. While there's a couple of reasons why I wanted to see it trade down there, primarily it was because of this right here. It needs to come back inside the range. So price did this. There's no order block inside here that you can trust to buy, because none of these order blocks broke above a high. So if you saw this and bought this when this is coming back down, then you're crazy. This here made a run that broke these highs, then I'd be willing to look at that. But then there's all this imbalance below you. Are you willing to enter at this order block here and put your stop all the way down here? If you're fine with that, then you could buy here. But because the imbalance is here, I don't want to buy and put my stop this wide. So if you take a look at the price action up here and look for the order blocks that are actually breaking market structure, first one that jumps out at me is this one right here, this itty bitty one right here. It creates this big swing that ran above these highs. All right. This is an order block I can trust. Buy here, put my stop here. This stop is very much smaller than this. So if I'm wrong, before price gets down here, I'll be out. If you're brave enough and not emotional and not afraid of getting a small stop out, then this is a trade you take. You'd make good bank on that. We have another order block up here that broke structure. If price comes back to that, I'll be willing to take another buy. Comes up here. This becomes that reversal pattern. 3 pushes to the high. Whenever that's happening, I ignore everything inside of this last push, because 3 pushes to the high usually cause a reversal. So I don't care if it's an order block up here. I want it to fail. I don't care if it's valid and it's breaking a high. I want this order block to fail. When this order block fails now, I will trust any retracements to sell, because the last high here for the ICT guys, this last high will produce breaker. And if you don't trade breakers, you look at the high that was rated here, and that becomes your zoom model. Yeah, the 3 Indian pattern, I think it's called. So now this is your breaker or your zoom model. I'm gonna give a little bit of good stuff in this one. In this run up right here, from this down candle all the way to the high, we have consecutive up close candles. which means all of this is your order block. So we have your breaker here nested inside your order block. If you take a look at this price action up here, everything inside here is efficiently traded. If the price action is efficiently traded like this, then this fair value gap is not on my radar. This fair value gap is not on my radar. I want to see immediate rejection from here. Because what? Inside here, between this low and this high, price went up, down, back and forth movement. Right? Inside here, price was efficiently traded. ICT gave this away for free on his YouTube in one of those videos. Can't remember which one. So these fair value gaps don't mean anything to me. If price trades up here, then I consider myself wrong if it's closing above this high. But this is what I want to see right here. Now let's look at the confluence around what we want to see right here. So this tells us that since inside here is efficiently traded and price is not going to go back up inside this, resist support broken becomes resistance is very possible at this low. So there are a couple of things now. Extend that low. Inside this low, what do you see right here? Fair value gap. Here to here. See how price is respecting that? Because this support broken resistance should work right here. Right here. I consider myself confident about this sell if we're getting back down here. Somebody's in the chat. Oh yeah. So here we are. This is your target. Now look where price came back to. Such a random level. Where did we get it from? Zoom out. I think we have like a minute left. So this 50 level was taken from the range created from here to here. If you missed all of this buy, then Forex was nice to you today. You would have gotten this again. I actually took this, then it breaks higher. Inside right here is another entry model that I don't think I have enough time to do, but I'll try to do it really quickly. See that right there? See this right here? Would have been all of that. That's my entry. That's my stop loss. It's gone. What are you targeting? Buy side liquidity that exists before you entered over here. And that is destiny fulfilled.